Should you prepay your property taxes for the new year thanks to the new tax bill? That's today's episode. Let's dive into it. Hey everyone, I'm Clayton Morris. Welcome, freedom fighters, to the Investing in Real Estate show. I've rehabbed thousands of homes, and I know a thing or two about real estate investing. And one of the big areas that is about to change, of course, is the tax code. And if you guys are, of course, following everything that's unfolded in Washington, we've got the brand new tax bill. You're probably wondering, scratching your head, how is this going to affect me as a real estate investor? We're going to have a bunch of episodes where we deep dive those particular questions. But on today's episode, I wanted to get this out before the new year because we just saw some breaking news within the last 24 hours, and I want to try to help you as much as I can. Our tax team is deep diving all of the loopholes and strategies and everything that you need to be a smart real estate tax investor, because let's be honest, money is made with taxes. If you're a smart investor, one of the areas that you build true wealth as a real estate investor are through taxes. The tax code is written to benefit you, and no more so than in this new tax bill that just was passed by Congress and signed by the president last week, right before Christmas. Now, the breaking news is around your personal property taxes and whether or not you live in one of the sort of expensive blue states, if you will. Now, I know that a lot of investors that we work with at Morris Invest, a lot of them come from California. A lot of them come from the East Coast. So those are the states that are going to be hit the hardest with this tax bill, meaning you will not be able to write off more than $10,000 in property taxes in the new year under the new bill in 2018. So there's been this mad dash, all of these people rushing to their local tax offices trying to prepay 2018 taxes so they get the credit. Let's say your taxes are $15,000, right? So they're trying to prepay that amount in 2017 because it's capped at $10,000 in the new year. Now, there's a whole lot of caveats with this, and I want to go down whether or not you should do this. And within the past 24 hours, the IRS has weighed in on this issue, and I'm going to get to that in just a moment. So let's take you through 5 different steps here, whether or not you should be doing this. Number 1, I want you to pull out last year's tax returns to get a frame of reference. Okay, that's step 1. I want you to see, well, how much did I pay in property taxes last year? What was my overall deductions for the last year? So if you are, and the reason I'm asking you that is because step 2, will you be an itemizer or will you be getting the standard deduction? Now, you remember those easy forms that people used to fill out when you were younger because you didn't have a lot of itemized deductions, you weren't wealthy, you weren't making a lot of money, so you didn't exactly have a lot of deductions. So you just did the easy form, right? It's 2 pages, you filed your taxes at H&R Block. That's when you were young and kind of naive, right? But now that you're a real estate investor and you're taking extra steps and you're really building wealth for your family, that's what we talk about here on the show, right? And the whole channel is devoted to that. Then chances are you're probably going to be an itemizer, meaning there's a lot of things you're going to be able to write off as a real estate investor, right? Your travel, your meals, your LLC, your business, the purchase of real estate, the purchase of your investment properties. All of those things will be itemized deductions. Maybe you bought a computer for your new LLC to help you in your real estate journey. Those are all deductions, right? And we're not going to go into all of what those deductions look like on this episode, but looking at last year's tax returns are going to give you a really good idea as to whether or not you, in fact, are an itemizer or you're just a standard deduction guy or gal. And so the standard deduction, if you're single, is $12,000. Meaning, if you're just going to take the standard deduction, you get a $12,000 deduction. Or if you're a couple and you're filing jointly, it's $24,000, okay? If you're an itemizer, that means that your itemized deductions will exceed $24,000. If they don't, then you're going to just stick with that standard deduction. Now, this prepayment of property taxes is only for the itemized deduction folks, okay? Those that exceed the $24,000 and who are itemizing their tax returns. So that's why it's a really good frame of reference to look at last year's tax returns to figure out, well, hey, we're an itemizer family, we've got a lot of deductions. Great. Then this is what would apply to you. Now, then you need to look at This is very important. Your state, local, and property taxes. So if you are in one of these expensive states, like I am, right now we're up in our mountain hideaway in the Pennsylvania mountains. So the state and local taxes here aren't as bad, nowhere nearly as bad as they are in New Jersey. And so where we live in New Jersey, we pay our property taxes. That's our primary residence, and our property taxes there are very high. And they're not as bad as they used to be, but we moved recently to a friendlier county, if you will. But the taxes are pretty darn high, property taxes. If you live in California, if you live in Connecticut, if you live in New York, these states have high property taxes. Maryland, high property taxes. But the key is, you don't just look at the property taxes. You want to look at how much you're also paying on your income tax for the state. So income tax, state and local, plus your property taxes. Those three, your local taxes, your state income taxes, and your property taxes. Now, do all of those, when added up, exceed $10,000? If the answer is yes, and you're also an itemizer, then yes, you want to prepay your property taxes. Your accountant will tell you the same thing. Again, I'm not an accountant, but this is what an accountant would tell us and has told us. So we rushed to prepay our property taxes. Now, here's the big caveat from the IRS. Okay, and I'm going to review a couple of these steps if they seem a little complicated. It is complicated. It's the tax code after all. The IRS came out within the past 24 hours and said, whoa, 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 hold everything, hold everything. You're going to be penalized if you start prepaying your property taxes. And everyone freaked out. You saw news stories last night. Everyone was freaking out because people are lined up at their local tax office trying to make these payments. And so all of these tax offices have people lined up out the door trying to prepay their property taxes. But the problem is, unless you have your property taxes assessed and billed, you cannot prepay them. You will not get any credit for it. So you're just wasting money. You're putting money into the pockets of your state and local government as an interest-free loan, essentially, with no benefit to you on your taxes. Okay, so what does that mean? You know when you get those coupons from your local government that shows that here is your tax assessment for the quarter or this part of the year, and you have to pay that in 2 months? That's when you've got an assessment. That means that they've given you that coupon, they've billed you for the assessed value of that property. That's the only way you can prepay it. If you just get an estimate off of a website somewhere and you send them a check for an estimated value, no, the IRS is saying that does not count. You cannot prepay that amount. So this has caused a whole monkey in the works, if you will, because a lot of state and local governments haven't sent out their assessments for 2018 yet. They haven't sent out coupons. They haven't sent out the bill for you to even know what to pay. If they have not done that, or if it's not available on the website for your local government, then you're out of luck. You cannot prepay that. Or you can do it, but you're not going to get any benefit of it, and basically you're just giving your state and local government an interest-free loan. So it's very important that you must have that coupon in place to be able to pay it. Now, how did we do it? Well, we had received our assessed value for the first quarter of 2018. Our state and local government had already sent us our bill and our assessed value for the first quarter of 2018. So instead of waiting until March to pay it, we paid it last week. Guess what? Now we will get the credit on this year's tax return because it exceeds $10,000. Smart. This is all about financial education, folks. So that was a smart thing for us to do. Our accounting team told us, get that in. That'll help defray your overall income burden, your overall tax burden. But again, I'm going to walk through these steps again. Number one, I want you to pull out your last year's tax return. Did you file single, with a single deduction, getting a $12,000 deduction? Did you get the $24,000 deduction? Then, if you are an itemized deductor, that means more than $24,000 of deductions that you plan to take, itemized on your tax return. Then you want to look at your state, local, and property taxes. When you add up all of those, does it exceed $10,000? Maybe it's $12,000. Maybe it's $13,000. If it does, then yes, go ahead and prepay your property taxes. But the big caveat once again is you must be billed for it. you must have received that assessed value bill in the mail from your local government in order to pay it. If you haven't, the IRS says no bueno. You cannot use it on your tax returns. And they're not going to give you any credit for it. In fact, they may actually penalize you for trying to claim it, and you may be audited. The IRS has said that you may be audited if you do it wrong. So don't do it wrong. Please pay attention to what I just said here. I know it's complicated, but on this particular subject, it's very important, and you've got to do it before the end of the year. That's why I wanted to rush and get this episode out to you so you have some extra tools in your tool belt on how to make this happen. Look, I hope you have a wonderful and happy new year. And shameless plug, it's my birthday. New Year's Eve is my birthday, so it's a great time for reflection, to think about your goals for the new year and really map those things out. I really love to, and I'm going to talk about goal setting at the beginning of the year here on this podcast because it's so vital. It's so vital. When I put that passive income goal up on my whiteboard, how many rental properties did I want to achieve? Did I want to create and get to my freedom number? By putting that out there, by putting that up on my whiteboard, we have hit it. And every year we set that goal and we hit it time and time again. So on my birthday, on New Year's Eve, I like to sit down with my journal and really map out our goals. My wife and I get together and have a deep discussion over dinner, on my birthday dinner, about what we want to achieve for the new year. And it's really a great time to reflect and cut loose. And also when you get the a list of 10 goals on your list, whittle them down. Whittle them down, because you're not going to do 10 things. Whittle them down to the essentials. And that's when you can really start to see some massive growth in your personal life and your financial future. So thanks so much for subscribing. I really wish you a prosperous new year. I hope this was helpful. Subscribe to our channel if you haven't already done so, and please share this podcast with this show with as many loved ones as you can. I know there are family members out there that could really use the financial education. Please share these with your friends and family and help them on their path to success. Much love to you all. We'll see you back here with another episode very shortly. Now go out there, take action, become a real estate investor, and create financial education and financial intelligence in your life. We'll see you next time, everyone. Happy New Year.